here we were down this week 50,000 barrels on U.S. production. So yeah, we've turned over, and we'll start down from here. 1,000 rigs makes a lot of difference. They're shut down, and demand is very high. I think demand will be over 2 million barrels a day, and that's on the high side. As you go forward from here, decline will happen, and U.S. production will go down. So I feel comfortable with $70.
You know, a couple of months ago,
I've got my money where my mouth is.
Are you long both oil and oil futures?
Yes.
All right, so you're doubling down, Boone. You know, about a month ago, I thought you were going to be right.
I'm not long the nearby. I'm long a fourth quarter and out.
The fourth quarter is not that far away, Boone. What's going to change from now until 3 months from now?
You're gonna need the oil. Is what's going to happen. And you know, people are all concerned about Iranian oil coming on, and Iranian oil, if they sign this agreement, and I have said about this agreement that if you want a deal bad enough, you'll make a bad deal. So stand by on the Iranian deal. It is going to be a bad deal. But as far as the oil is concerned, Iranian oil won't come into the market until next year. And when that happens, you're going to need the oil. Today, you're producing 93 million barrels a day is what your oil production globally. You take United States 9+, and you have OPEC 31, that's 40. Now, you've taken 40 off of 93, leaves you 50 million barrels. That 50 million barrels is experiencing a 5 to 6% decline. So stand by that. You said, well, Iraq oil will come on. Well, Iraq's 4.4. They're probably peaked now, but that's over in the OPEC stack. But you go back to the rest of the world at 50 million barrels, which includes Russia and others, that they'll experience a 5 to 6% decline. And now we're talking about 2.5, 3 million barrels more that you'll need for next year to replace a part of the 50 million.
Boone,
so you're going to need the oil.
Boone, how are you reading the tea leaves on the talks with Iran? Some say that the longer these talks are drawn out, the less likely a deal will happen, and therefore the less likely the sanctions will be lifted and that oil will reach the market. I should say the oil will not reach the market. How are you sort of reading what's going on?
Well, I'm reading, and I couldn't hear the question totally, but I think I'm going to answer what you wanted, is that I see the Iranian oil comes on about mid-year next year is what will happen. And at what level will it come on? It'll come on closer to 200,000 barrels a day than it will 1 million barrels a day. And I see people talking about 1 million. I don't even think that's prospecting.
You know, even if it's 1 million, though, Boone, 1 million is going to be just under 1% of global production. If we get the Iran deal and we get the high end of the global supply from Iran, would that be enough to move the market?
You're talking move the market up or down?
Down.
You didn't hear what I said. Next year, you're going to need 2.5.
I did hear what you said, Boone, but it's called pushing back a little bit, right? It's 1 million extra barrels in a market that is already oversupplied. Let's say we even just get 250,000 barrels a day from Iran, the minimum perhaps of any deal amount. That's still 250,000 more than maybe the market needs right now, is it not?
Well, right now is not when you're going to get Iranian oil. Iranian oil, I said, doesn't come on until 16. So you're not going to really see any Iranian oil.
You know, we've gone this far in the conversation. We haven't even mentioned what's going on in China, Boone. Are you assuming that the demand from China is going to remain the same despite what's going on in the Chinese stock market? I mean, some would argue that the next shoe will drop 6 months from now or a year from now when those lockups on stocks, because the Chinese government is saying you cannot sell stocks right now, but 6 months down the line you can. The next shoe to drop is going to happen in 6 months when that expiration goes out.
Okay, are you willing to predict a bubble for China, and the bubble has popped? Is that what we're looking at?
I'm saying what I'm saying is to you is even though we had a rally in China overnight, maybe the worst is yet to come and yet to be felt amongst the Chinese consumer, who will then pull back their demand for oil.
The Chinese stock market isn't that big. And when the government can say shut down 40% of the equities on the stock market in China, you know, now we're trying to slow everything down and try to stabilize. And then they tell them now, okay, go ahead and start trading, buy back your stock now. Well, that's another stabilizing factor. I'm not frightened at this point, by what's going on in the Chinese market. The Chinese use about 11 million barrels a day. The United States uses 18 million barrels a day. I'm answering the question now. No, I don't think you're going to see demand go off for China. I think they will still, their demand will remain stable at 11 million barrels a day.
You know, Boone, I want to get to your excellent op-ed in Time magazine because you note something that we know, which is that ISIS has gone after oil production companies and regions and refineries and maybe largely funding their terror organization by oil. Al-Qaeda's kind of been relegated. You note in your op-ed that you believe Al-Qaeda will make a play for oil production or at least try to block off oil delivery sometime soon. Why do you say that?
They're constantly, I'm sure, their strategy is come up with something that is going to mess up first the Israelis and the United States. That's who their target is first. Then the rest of the world comes next. So they would like to shut down the Straits of Hormuz. That's 17 million barrels a day coming through there, and the Fifth Fleet is protecting that. Let me tell you, Al-Qaeda shutting down the Straits of Hormuz, they'd have to have something unusual that nobody has ever seen to trump the Fifth Fleet. And so but did I answer the question?
Well, I'm just wondering, I say, what if Al-Qaeda, which again has maybe been a little bit relegated here in terms of, you know, ISIS's growing shadow, if they make a play, let's say in Iraq, you mentioned over 4 million barrels a day, Libya is trying to come back online. Does Al-Qaeda have the ability, in your mind, to disrupt global oil supply and thus price?
Well, global oil supply disrupt by Al-Qaeda? Likely not. Could they do a local play in Iraq? Iraq's 4.4 million barrels. I don't know exactly what it'd be. If you'll notice, Al-Qaeda, ISIS, all of these terrorists, they don't blow up oil facilities. They don't knock oil off the line. Why is that? We said 5 years ago that if you're buying OPEC oil, some part of that money gets in the hands of the other side. So we're funding both sides of a war. They don't want to blow up the oil facilities. Look at Libya. They got 4 wars going in the same country there, and nobody fools around with blowing up anything. They don't, because they're all nursing off of the oil in that country. The good guys, bad guys, and those that you don't even know what they are all getting some of that. Now, Jim Woolsey and I agreed on this point 4 years ago, was that when you're buying OPEC oil, watch out, because some part of the funding gets in the hands of the enemy. And that's exactly what's going on today. Nobody has blown up the oil field yet because they all have a stake in it.